It's about that time of day again here, folks. Welcome to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, April 14th, 2015. In tonight's newsletter, crude oil has been trading in a triangle formation this week, and today we tested the extremes of that range, all the way up to the highs in a short-term bull channel. So we expect to see these prices try to come back down. In addition, we have a very big clue from a channel undershoot on the price action chart telling us to expect these sellers to take some control from here. We got a good plan for you guys on crude oil. Stick around for more on that. How about the gold, the yellow metal? Also bearish this evening after testing the highs of a long-term bear channel. We expect price to try to push lower from here, but we have some very interesting clues on gold telling us this price might just try to go higher before it goes lower on Wednesday. You know, they don't call it price action for nothing. Tomorrow should be a very interesting Wednesday, tax day here in the U.S. Of course, I don't need to remind you guys and gals about that. It should be a wacky Wednesday in the financial markets. As you can see, we have a great newsletter in store for you guys and gals this evening. Plenty of trading opportunities on the way for tax deadline Wednesday. But before we begin, I do want to remind you, I teach all of my students how to create these charts, how to use these charts every day in our live trade room here at SchoolOfTrade.com. And make sure, if you're watching this video right now, make sure you're watching it over on our trading blog at SidewaysMarkets.com. There are 3 reasons why you should be watching this video on our trading blog here at Sideways Markets. If you're watching it on our YouTube page, great to be on the YouTube channel. Lots of great trading videos there, but right below the video, in the description of the video on our YouTube channel, you will see a link that'll take you right over to this page. 3 reasons. First reason, you can download all the charts that I'm going to use tonight. All the charts you see in tonight's video, you can download all of them and have them ready to use tomorrow on your computer at your own leisure. Second thing, we have a free pass for you to attend our live trade room as a guest. If you're not a member of School of Trade and you'd like to come in and join us in our live trade room this week, I have a special invitation for you. You can grab your free pass in the upper left-hand corner. Don't forget to share it with a friend. And of course, last but not least, there were 3 reasons here. We have a nightly newsletter mailing list every evening right about 8 p.m. Eastern Time when I finish up my crazy day here at the corporate headquarters in Los Angeles. I'll send you an email. All I need is your name and your email address, and I'll send you an email every evening when I finish up the newsletter video so you can know exactly when it's ready to be watched. All right, guys? So make sure you follow the link if you're watching the video on our blog. Follow the link below the video. Download today's charts. Grab your free pass and register for your nightly newsletter mailing list. Guys, if you grab the free pass or you register for the newsletter list, I'm going to send you a verification email. So make sure you check your inbox. Make sure you find that verification email so I can keep sending you emails in the future. All righty, ready to rock and roll here? Let's start out with that yellow metal, the gold futures. Not a lot has changed since last night's newsletter. Last night we talked about selling short on gold, staying focused on selling the rips, right? Looking for resistance areas to sell. We found a great spot here today in our live trade room just as we came back up and tested this 97 area on the GC. So we're definitely looking to continue this move down. Gold is bearish this evening, testing the highs of this bear channel. Very easy to see that. We have a few different clues as far as how far down this is likely to go. We have, of course, our measured move that gives us a target right around 1180. That looks pretty tasty on the way down. You can also look at this as a shorter term measured move, right? More recent, I guess you would say. That puts us at 72.8 towards the end of this week. So we get some great targets waiting for us. We have a trigger zone here for a short-term target at 86.8. We have a swing low or range low target at 83.5. And then this little bad boy over here, this little tasty little swing low, this major range low. So I would say tomorrow, great looking target down around this 1180 to 1178.4 area. Now, just a heads up here, just a heads up today. If you're wondering why the volume is so low, right? Tomorrow is, of course, tax day here in the U.S. We have seen some low volume. Today was very, very low volume. The key, like I said last night, was to get to it early and get to it late in the morning, and that has definitely been the theme. So keep that in mind for tomorrow. Get at it early and get to it late in the morning session if you're trading the U.S. session. If you're trading London, you shouldn't have much difference of normally what you see, but you'll definitely see a little bit lower volume as the U.S. traders, because they're going to be, hopefully you've got your taxes done by now, but all the late tax folks are going to be getting them pushed through the mail tomorrow, and we'll definitely see that middle of the morning kind of slow down, right, as the doldrums settle in, between 10 o'clock and 11 o'clock, like we've seen so far this week. So combine that low volume, right? Combine that low volume along with this undershoot. I want you to take a look at this little undershoot. It's easy to miss. Take the channel high, project off the channel low. It's really easy to miss. And you'll notice it doesn't really line up very well, right? You can't really get it to line up very well. So no matter how you draw the channel, there is an undershoot of these lows. Now, it appears that we have held, right? It doesn't look like they're having any trouble at all holding at that high. Now, under normal conditions, I wouldn't say to worry about this, but it is low volume, and yeah, I'm looking at you, big round number 1,200 an ounce. These markets, they tend, when they're low volume, anybody with a handful of contracts can go grab some of that and, right, bring it back up before it goes back down. So that undershoot gives me just a little inkling of a concern here for these bears. I'm definitely a bear right now, but do not be surprised if this market tries to find its way back up to 1,200, fill the undershoot, overshoot, and then, of course, right, take the sucker all the way back down. We'll have to wait and see how this overnight session looks. Now, how about we look for some more clues for that? So this chart, as you can see, a very different looking chart. The next chart I'm going to show you, this gives me a little bit of a clue here for possible undershoot, overshoot. Although we're definitely bearish right now, we are going to be open. We're not going to freak out, let's put it that way, if price guts up to 1,200 here overnight. Doesn't change a thing. We'll still expect it to want to come back down. Now, looking a little bit more detailed here, let's zoom in now to a price action chart. And this is where I say we definitely don't call it price action for nothing. There's a lot going on this chart. Let's dig in. Buckle your seatbelts on this one. And you're going to see another reason why we just might see the bulls take a little bit of a swing at this before we get to our desk tomorrow morning here in the U.S. Gold price action shows us breaking the highs of a long-term bear channel, right? There's your long-term bear channel, right? You'll learn about this in our course materials here at School of Trade. 45-degree angle, 4 total tests, 2 on each side, right? Pretty good looking channel if you ask me. So we break through those highs, and there's going to be some late adopters, we call them, right? People who are just now catching on with this bearish trend, and they're going to try to run this back down to that 1183.6. So you're most likely going to see the sellers try to get this down, right, to that 83.6. Maybe the 78.4. We'll talk more about that in just a moment, why that level's there. So we already know this, right? Yeah. We already know the sellers are definitely in the long-term control right now, and we're in a downtrend. You were talking about the reason why the bulls might take control. Okay, let's take a look at that now. Now we have this short-term bull channel. Another good-looking channel, right? A handsome-looking channel. Yeah, we got the 45-degree angle. Yep, check that off the list. Yeah. We got the 1, 2, 3. We got 4 total tests, 2 on each side, right? It looks pretty good to me. What's the problem then? Well, here we go. There's an undershoot of that high. Undershoot of the high, that doesn't sound like a very bullish clue. Well, it's not. But we do know that an undershoot of the high expects an overshoot of the low. And look where we are right here. This is pretty interesting stuff if you ask me. We have what appears to be an undershoot support level here. And boy, if this is not a support level, then apparently I need to find a new day job, because you can see right here it is holding very, very well right now. That is an inflection point. What is resistance becomes support, and it's really looking very, very neat and tidy here. It looks very well kept, if you will, very manicured support level here. So undershoot, overshoot, right? They're going to be about the amount of room that we undershoot is about the amount of room that we're going to overshoot, right? Dot the I, cross the T here. Now we know this is what I've kind of nicknamed the battle line here, right? This is kind of the line in the sand here. What this tells me is that if we teeter here and we collapse back below, okay, now those bears, you win. And again, we're probably going to see a relatively easy move down to that 83.6. Hold on, we aren't there yet. What if it doesn't go, right? What if we just poke our head and come back out? The key is we need to get below it and stay below it, right? What does that mean? That means convince me here, bears. Give me a nice strong close and stay below. I don't want to see any just wicks below 92.1, right? Capiche? So we know we're looking for the price to get below and stay below, and then that will tell us sell, 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 sell on the way down. Now, if we do, and this is a very, very important clue here, if we do, remember, low volume tax day tomorrow, if we do make our way back up to 98.8, no, not 1200, all we need to achieve is 98.8. If we get to 98.8, that completely changes the game. It completely changes my opinion of where this price now goes. Now, from there, where do we go above 98.8? Well, nothing's guaranteed. Only thing I'm certain about is that the sun's going to rise tomorrow. But what I definitely can tell you is look what we have here. We have a clear trading range. How do I know that? Double tops, double bottoms, right? Flattening moving average. Trading ranges are pretty darn easy to see here with those flattening moving averages. So, what does a trading range tell me? See how it's all coming together? I told you there's a lot of stuff on this chart. We can easily see why the bears will take it. We can easily see why the bulls will try to take this thing higher. And now we know our lines in the sand. Okay, let's get ready for it. If we do get back higher, take that trading range, copy and paste, 1205.6. Copy and paste, 1212.4. 1212.4 is a pretty decent move for a low volume gold market tomorrow, but it's not that big of a deal. This is not crude we're talking about, right? This is gold. For crude to move $12, it's a big deal. But remember, there's only 10 ticks per dollar on gold. There's 100 ticks per dollar on crude. Big, big, big deal, right? So getting up to 1212.4 in a low volume environment, it's not that big of a deal, right? Nothing to write home to mom about. So we definitely know those are some targets waiting for us above. Same thing, we go down to the bottom here, take the trading range, measure the range, copy, paste, and now you can see here kind of where we get these swing targets, expansion targets, big, juicy, tasty bear target down here at 1183.6, and then, of course, your range expansion target there at 78.4. I already told you what I'm looking for. I'm expecting price to keep trying to go lower here. But if we get to that 98.8, again, temporarily, the game is changed up a little bit, right? How can you trade with me tomorrow? Come in and see me tomorrow. I'll walk you guys right through what I'm seeing. And we may not even have to wait very long. This candle may close right down, but at least now you know. We close strong below 92.1, and you know my targets. If you want to see the exact entries we're going to use to get into those trades, come out and see me tomorrow in our live trade room. Boy, how about crude? We made a run for the low overnight last night, right? Moving now from the yellow metal, the yellow gold, to the black gold, the Texas T. Now over here on crude oil futures, I thought we were going lower last night. Today was a great example. By the time we got back to our desks in the U.S., 7:30, 8 o'clock in the morning, Eastern Standard Time, we noticed higher highs and higher lows. So we didn't even think about being a bear. We were buying all morning on crude. So remember, today was a really good example of why we never write anything in stone. Again, these levels that we find in our newsletter, these are levels of interest. These are areas of support and resistance where we anticipate traders to react. There's no guarantee, right? Besides death and taxes, and I'm pretty sure the sun's going to come up tomorrow, and I'm pretty sure if I don't mail my check to Uncle Sam, right, he's going to show up at my front door and stick a foot in my, right? You get the point. But we're going to use these levels as areas of interest. And then it's up to us to go in and look for the entry patterns from there. So today was a really good example. By the time we came in this morning in the U.S. session, that low volume really, really sucked the life out of those bears, and the bulls just took it from there. So while we were expecting here to see it go lower today, right, and finish the move lower, well, we didn't get it, and that's just the way it goes sometimes. Now we find ourselves, if you remember, we have this wedge we're looking at here right now, this triangle, right? Wedge, triangle, pennant, potato, patootie, however you want to say it. We are now right above the highs. If you remember what I said yesterday, these are very easy markets to trade. We just, of course, had some really low volume, which gave those buyers a definite window overnight, and they took it. Now, we always look to, as price goes up, sell it back down, right? As price goes down, sell it, right? Buy it back up. Because of this triangle you're seeing here, this is what tells us to keep looking for price to push back off these highs. So crude oil is bullish in the short term after pushing up through the highs of the triangle or the wedge, whatever you want to call it, but there was very low volume. We have inventories tomorrow. We saw this last week. Remember last week? It was 1 week ago that we saw this move higher on Tuesday, just before, remember that fun time we had last Wednesday, right, where it moved $3.50? Yeah. That is definitely setting up once again. I don't want to go predicting anything, but today's low volume move, we did not see volume confirm into the close, with the low volume move putting us up right at those range expansion resistance areas, right? Take this trading range, copy and paste. These are really easy areas to find, guys. I'm not doing anything that's groundbreaking here. This is proven technical analysis that I look forward to teaching you how to trade every day in our trade room, right? We're not trying to reinvent the wheel. We're just applying them with a little bit of a spin for today's active markets, right? So a little bit of low volume pushes all the way to the highs here. We are expecting this price to go lower. If it doesn't come lower, right? If it doesn't go lower, we will continue to buy the pullbacks, right? There's no reason why I have to only sell short, right? So we'll come in, we'll take a look at this tomorrow, and we'll see how this looks. My gut tells me we're right about that area where we should start seeing this price come right back down. But, my gut is not a trading strategy. I have to do what the chart tells me. If we do come back off those highs, though, look at the 51.94, right around 52, big round number. Look at the 51. There's a lot of interest in this 51 area, so you've got to be looking at those big round numbers right now to be used, especially with the low volume environment we're having this week. We got to get through Uncle Sam's party day, right? We got to get through tax day tomorrow, and then finally shrug off this low volume as we go into the end of the week here. And then how about another very interesting chart? Here's another pretty interesting little picture of price action here, right? A lot of interesting clues in this chart again here on crude oil. You'll notice how much different it is, right? You'll notice just right away how different this chart looks. The reason why we do that is so we can get a more refined opinion on what we're looking at for tomorrow. Give us a few more looks at the same chart, right? I'll teach you guys how to use both the JJ charts and the tick charts. Not difficult at all. It's almost so simple, right? People assume that it won't work. Crude oil price action, okay, we are bearish after the undershoot of the bull channel highs, and we fail to stay below the overshoot, right? This is a good example of what we were looking at on gold, of what we're expecting to see on gold, right? Now, look at all the stuff that happened here, right? So first of all, no doubt about it, by the time we came in to the U.S. session this morning, we were already seeing higher highs and higher lows, right? There was no doubt about it. We were ready to be buying these pullbacks, right, as we were going higher. It was relatively easy, okay? Yeah, we're a little bit disappointed. We're going to get that big sell-off, but hey, that's the way trading goes some days, right? Some days are easier than others. So, but now we get an undershoot, right? Not the biggest undershoot in the world, right? Not the biggest undershoot in the world. And now that undershoot now, we get an push below the overshoot level, right? So the amount that we undershoot, typically about the same amount that we overshoot. And you can see it really put up a fight right there, right? They definitely tried to hold it up, but it slipped below. And then almost as if like clockwork, right at 4:30 Eastern time, I was wondering if traders picked the wrong market, because you don't see this very often. This spike up went right at 4:30 Eastern time. This doesn't happen very often. Crude's not the E-minis, right? This is not the equity markets. This is crude we're talking about. And look where it goes, right to the low of that channel. Now, here's what usually happens. Usually, when we see a breakdown of a bull channel that just snaps back retests the low and then closes down, usually that's a very, very big, in this case, bearish clue, right? Very bearish clue. So we definitely have the bears appear to be in control. Then we have this short-term bear channel. And just like we said about the long-term channel on gold, right, when we break the high of a channel, usually there are going to be some late adopters that are going to try to run this thing back lower. So the bear target right now this is very similar to what we just saw on the long-term channel on gold, right? Let me go back here again. Here on gold, remember what we said? That long-term bear channel, right? The money shot is down to this 83.6, right? Remember how we said earlier? We're gonna stumble down to that 83.6 area, right? Because that channel, the late adopters come in, right? Yada yada yada. That's just the way the markets work. Okay, don't ask me why. It's the way they work. It's called crowd psychology. Gotta love it. So here's another bear channel in a very similar scenario, right? Bear channel, we should come back down to retest that low again. So 53.06 is my line in the sand. We get to 53.06, now these bears are right back in control. Where do we think they might go? Well, flattening out of the moving average, right? Double top, couldn't close above, right? Double bottoms here. You can easily see some support here. We take that range. Again, copy and paste, copy and paste, copy and paste. And you could even put a third extension down here. And so that's where you're going to get your easy bear targets. 1, 2, 3. Maybe we get down to 51.85. It's been a really condensed, range-bound scenario for crude so far this week, but definitely be looking for those range expansion targets to the downside. Now, maybe I'm wrong. Remember, there's a lot of concern about the low volume environment right now on crude. So if I happen to be wrong, right, you can see it didn't stay below that overshoot level very long. And again, what normally happens is we snap back, retest that low. If we're going to keep going higher, we're going to go higher right away, right? But it closed down pretty solid. So that's a big bearish clue. But hey, if I'm wrong, no big deal. That's the best part about trading, right? You can be wrong most of the time. Just like playing baseball, right? You could be wrong most of the time, but if you're right and you make more money when you're right than when you're wrong, that's how you make a fortune, right, in the financial markets. So if this price goes higher here, not a problem at all. Just buy that pullback, breakout pullback. You can definitely see here it's a bullish run up into this range, right? This could easily be seen as a trap. Okay, I see it a little bit differently, right? Undershoot, overshoot, break. I see it a little bit differently, but it could easily be a trap, right? If you're a member of mine, you know what I'm talking about. And then, of course, you got to break out, pull back, and where will we go higher to? Again, range expansion targets. All right, guys? Now, remember, low volume tomorrow. Get to it early. Get to it late. Be aware of that slowdown, middle of the day. We have inventories tomorrow at 10:30, so even more reason to be aware. You're going to get some slow price action tomorrow on crude, most likely a little bit on gold, as, again, traders are distracted with paying Uncle Sam tomorrow. All right, guys, don't forget, put a stamp on it. Put a stamp on it, right? You don't want to have it returned to sender with a bill, do you? You don't want an invoice from Uncle Sam on return to sender. Don't forget the stamps tomorrow. And don't forget, come out and see me tomorrow in the trade room, right? We're going to update you guys on all the real-time environments we're seeing as we open up our live trade room tomorrow morning at 8 a.m. Eastern Time. Download those charts. Grab your free pass. Register for the newsletter mailing list. And don't forget, guys, yeah, we have the best free trial. You were probably asking, do you teach any of this stuff without being a member? Absolutely. Join our free trial. I'll put my mouth where my money is, huh? I don't think that's the way the saying goes, Joe. I'll put my money where my mouth is. It's been a long day in this office. Guys, join the free trial. You got 1 week. I'll teach you more in 1 week than you will learn anywhere else on these webs of ours. Guys, here at School of Trade, I have someone standing by 24/7 to answer your questions. And remember, we're not gamblers. We're not here to get rich quick. I've been helping new clients start a career in the financial markets for over 11 years. I look forward to the pleasure and the opportunity to do it with you too. My name is Joseph. Be well out there. Be nice to each other and get to that post office early. Or do it tonight, right? Don't forget. There's no harm in sending it out early. I know we don't like this time of the year, but hey, You got to love a capitalist society. You got to love a capitalist society. All this opportunity, but yeah, we got to pay a price for it, right? It's a beautiful thing that we have here in America. I will be hopping and skipping on my way to pay my bill tomorrow. I hope you will too. All right, guys, don't forget, send me some feedback. I'm JJ at SchoolOfTrade.com. What do you love? What do you hate? And I'll see you tomorrow. Adios, amigos. Bye-bye for now.